It's the final segment of our fourth season of doing the show, so it's an auspicious occasion for sure. And we just want to go out on a high note. Would you say that that's where we're at this point?
I think it certainly is going to be a high note. We've really had a season full of great topics. We've been through obviously some tough times. We've reported on the news around what's going on with the Bank of Canada, and I think that we've tried to give as much advice as we can. And, I think we've talked about income, we've talked about assets, and we've talked about, really what's going on in the marketplace here in Halifax and across the country for real estate. So, we certainly had a lot of listeners, and, we've had a lot of people tuning in. And I think the education is just really important this year. And, I think we'd be remiss to say that inflation is really still at all-time highs. Now, obviously, there has been some softening since the Bank of Canada has increased the key overnight rate, but it has not yet softened enough. And obviously, some people are going to be having maybe a slightly more challenging holiday season this year compared to previous. And I think next year is going to be a bit of a storm, Todd. I think we all need to tighten our proverbial financial belts, really. And I think that...
But are people doing that, though? Because like
I don't know.
We're heading into Christmas again.
Yeah.
And the fever pitch hits and the malls, and everybody wants to get out. And look, do people get it?
I'm not sure people get it yet. Yeah. We've said people that are in a low fixed rate. Those rates are not lasting forever. And chances are when that rate comes up for renewal, you are going to renew into a higher rate. Also, consumer goods are at all-time highs. We've talked a lot about variable rates. Today, Todd, about 70% of consumers are taking a variable rate. We've been on, obviously, in CityNews in Halifax and in Ottawa, and some people are feeling the pinch because of what's going on with variable rate mortgages. Some people are regretful that they did take a variable rate mortgage when the rates were low. They thought they were going to stay low forever. And that's not the case. But the rates will go down again, Todd. I think that's what we need to remember. And the people that are regretful, you can't regret the past. Everything is a snapshot in time with the information that we have at that time. First off, we didn't think there was going to be a pandemic. Second off, we didn't think inflation was going to be a runaway train. So the one thing is that, yes, if you took a low fixed rate 6 months ago, a year ago, 2 years ago, 3 years ago, 4 years ago, it's cheaper today. But over the next 5 years, will it be? We are not sure. Historically, consumers do better in a variable rate. And you, as a consumer who took a variable rate, took it for a reason. It was lower at the time, and it really provides a lot of flexibility. You can always convert your variable rate into a fixed rate. But if you were to break your variable rate mortgage early, it's only 3 months interest. So there's a lot of pros around a variable rate. Is it more costly today compared to maybe your friend that took a mortgage a year ago? Yes, it is. But what will happen again in another year? We need to remember variable is variable. And I think it's really about kind of keeping an eye on that. Talking about Financial Literacy Month, the holidays can be a stressful time for anyone. I think that we are very much in a consumer goods environment. We're in this instant gratification. We want to provide a great holiday to our family and our friends. But I think this year, it's more about maybe experiences. I think Mariah Carey said in our song, all she wants for Christmas is you. And I think that's okay. I think we really need to buckle down. We're in a storm right now, Todd. Chrystia Freeland, when she put out her advice here earlier in November, said that Canadians are having a hard time and next year is going to be hard. It's going to be dark times. So what can you do today going into the holidays? And what can you do in January and going forward to best manage your finances and kind of shelter yourself or shield yourself from the impacts of inflation?
And like you've said many times, if in fact you are at the point where it's overwhelming, and then again, we want to be positive here, but the reality is that perhaps look at selling. It might be the time for you to sell and start over, and there's nothing wrong with that either, right?
I think some consumers, we're seeing reports in Ontario that some consumers that had a mortgage from an alternative lender or MIC, which is a mortgage investment corporation, are not offering renewals because either the value of the home has gone down or they need to regather their capital. So I think dealing with renewals early, looking at your entire financial, situation. There's nothing dishonorable from selling your home and starting again. That might be the reset that you need. A lot of consumers do still have a lot of equity in their homes.
Yeah.
So maybe you can sell that home and buy a smaller home. Maybe you can sell that home and rent. In Atlantic Canada and Halifax, rental vacancy is only at about 1%. So I think that's also challenging. But I think looking at it and planning, and I do understand the emotional connection to real estate. I get it. I don't have it specifically. Right. I'm in a very, a business where I bought and sold homes like many times. And I don't have that emotional connection, but a lot of people do.
Right.
But don't let that emotional connection, dig yourself a hole that you can't maybe get out of.
Yeah, absolutely. Yeah. So, and again, just ask the questions, right? If you don't know, if you're it's a good time of year. We're going to get into this, obviously, into the new year. We'll talk about all of this, but it's instead of waiting till after Christmas, do it now. Like open everything up, have a look at all the statements, and make wise decisions. That's the best gift that anybody can give to each other as a family.
Is honesty.
Make honesty and informed decisions together.
You touched on it. We've joked about Wine Wednesday. It doesn't have to be Wednesday. You don't have to drink wine, but open your bills. Talk about what you owe. Talk about how much money you have in the bank. Talk about your income. Talk about your credit with your spouse. If you're an individual person, then do that with yourself. Maybe make a spreadsheet. Look at things, once a week or once a month. And then that will help you make a budget. People are not good at budgeting. Canadians have not been great at saving either. Obviously, there's some great saving vehicles that you can take advantage of, like RRSPs and TFSAs. But by and large, we're very heavily indebted. And I think paying down the debt now will pay you dividends down the road.
Right.
And really making sure that you focus on the needs versus the wants, because even at this level of inflation, the costs are still going up. But most people's income, is staying relatively stable. So I think really keeping an eye on that is very important.
Yeah, and again, but heading into Christmas, have a realistic Christmas. Like have it so that have the conversation and have a family conversation about it as well, right?
Talk to your kids.
Talk to your kids.
Talk to your spouse.
Right.
And talk about these financial literacy things. I think talk about the credit, talk about all the assets and saving and all these things. And I think it will make your household a stronger place. And I think, having a lean Christmas is going to be okay. Really focus on those experiences. And how many times I've seen it. I've had it myself. You receive gifts and you're like, okay, that's nice in the moment. But then you're like, whatever. Yeah, you want to open something.
That's right.
Maybe you want to open one really great gift. You know what I mean? So
one thing that we definitely want to do is wish everybody happy holidays, however you celebrate throughout the whole region. From us at City News, and of course from you and your business, right?
100%. Our listeners have been very loyal all year long, and we do thank you.